Hello, everyone, and welcome to the Monday Open, hosted by the Vantage private client team. My name is Ollie, and joining me today, we've got Steve. How you going, Steve?
Hey Ollie, I'm good. Yourself? Sounds like you're recovering from your sickness last week.
Oh, yeah, mate. Not before giving it over to the entire office, unfortunately. Okay, so let's move into the agenda for the video ahead. So, for any of our returning viewers, this will all look pretty familiar, but for any of our new faces here, this is how we normally run it. Starting off, we'll take a look at the key events from last week and take a look at the major themes and see how these move prices. We'll then move into the week ahead section where we'll put a spotlight on a couple of the major events for the week ahead, give our take on how this fits in with the major themes, and give our speculation on where we think prices will go. We'll then move into the technical corner where we'll be putting a spotlight on a couple key different markets and analysing them using our top-down analysis and technical indicators. And then lastly, we'll move into our Q&A section where Steve and I will answer some of your guys' most commonly asked questions from last week. Okay, so starting off the last week section, on your guys' screen, you will see your top traded products from last week. Notable addition into the top 10 this time around, we've got silver has replaced gold against the Aussie. But how about you, Steve? Any surprises?
Yeah, I'm actually surprised that silver actually got dropped out previously and then replaced with gold against the Aussie. So yeah, it's one of those ones that we don't probably see as often.
Right, a lot of Aussies trading gold at the moment probably just makes it easier to manage the book. Okay, so switching into last week.
Yeah, last week we obviously had a few public holidays. So we had the US, Canada, and France, which showed a little bit less liquidity throughout the week. We've obviously touched when it comes to public holidays and how it impacts the markets. What we saw last week was a pretty decent figure when it comes to the Aussie unemployment. So it actually dropped from 4.5, which was the highest since November 2021, to 4.3. So we saw about 42,200 enter the workforce. And of that, it was actually really good to see that the full-time rose by 55,300 and part-time fell by 13,100. So good to see, obviously coming into Christmas, which is pretty important to obviously have a job during the sort of festive season. We saw the unemployed decline by 17,000, while the participation rate was pretty high, so 67%. What that really meant for the Aussie did shoot up because of obviously the better than anticipated unemployment rate. But throughout the week, it kind of got dampened by a lot of things happening within the US. But with the sort of results that came through, I guess the RBA would have been pretty happy, considering that their decision to go on hold. What we've also seen is that NAB, for example, rule out the May interest rate cut for 2026. CBA already had no future cuts planned for 2026, while Westpac has actually raised some of its 1 year as well as 2 year fixed rates. So as well as the actual 3 years. So that's a kind of signal that people are thinking that it's going to be on hold for quite some time. Also, HSBC thinks the RBA has actually finished cutting and has basically on hold for the rest of 2026, and then potentially interest rate rises in 2027. So pretty interesting times. So keeping an eye on that personally, obviously with the interest rates impacting yeah, when it comes to properties. So yeah, it'll be interesting to see how that pans out. But also the ASIC dropped 118.9 points, so 1.36% on the day, which was a 4-month low, suffering its worst day in 10 weeks amid a global sell pullback in more of the risk assets. So also was the fourth decline of when it comes to the ASX 200, as well as the third straight week of losses. So you know, worst weekly performance since a 3.9% loss for the first week of April. So quite interesting to see with that. Obviously, we also had the China data. So China, the industrial production wasn't great from the sort of business side, but we saw a bit better than expected with the retail sales that would have made a little bit of an impact when it comes to the Aussie, for example. We also saw the UK claim account being worse than expected, as well as also GDP. So yeah, quite interesting to see with that. We also saw some sort of data that wasn't coming out because of the government shutdown. So it was actually the government shutdown did actually end as of last week, but there were actually a bit of confusion around whether it would see the CPI or PPI numbers, but it was confirmed with the White House that basically any of the October data won't be released. So what that really meant was, I guess there was a risk-off sentiment when it comes to the markets. This really impacted the actual data, so it kind of impacted the Fed basically before the next meeting. They're not going to get the October data, which is really kind of highlighting that they could be flying blind. We saw the Democrats basically crave in without any sort of, basically it was almost a non-existent event. It lasted 43 days, and now the longest in US history. What did you think, Ollie, about the US shutdown?
I mean, I don't really know too much about how it started, but I'll be shocked if it actually goes on from now. I think what the deadline that he says towards the end of January, and then
Yeah,
I
no,
reckon it's
definitely.
gonna, I reckon it's gonna keep going. I think it's just a big play, to be honest.
Yeah, I mean, it is interesting because it's just right before the sort of festive season, so it could be more like a pause. So there is still going to be, until it's confirmed when it comes to the sort of vote around really Obamacare. It'll be interesting to see how that goes. But throughout the whole week, it was really around, I guess, a lot of hawkish comments from the Fed, which caused indices to drop, such as the Nasdaq, as well as the sort of AI play. So what we saw is there was more talks in regards to, I guess, the December rate cut. So before the actual comments throughout the week from the Fed, there was a 66.9% of rate cut. But now, as of today, it's sitting as of current is 43.9 according to the Fed CME tool. So interesting to see with those comments on how it impacted. There's a bit of uncertainty now. We've also seen the likes of Bitcoin have a risk-off sentiment. So considering that the sort of data points, and we're not seeing that, so it's kind of impacted everything from that sort of perspective. We also saw gold slip quite a bit because with the gold, one of the biggest sort of drivers was around the easing cycle. So really around the Fed cut. So seeing that is now in jeopardy of just being on hold, we're just going to wait to see, I guess, the sort of data, especially around with if there's any sort of data before the December meeting, which is going to happen on the 10th of December. But looking at this week, we've got basically the RBA minutes. So the RBA minutes I expect with the RBA minutes, it's going to be really in line with what Michelle Bullock mentioned on the speech on Melbourne Cup Day, which was really around the unanimous decision to hold, as well as the future to be really data driven. So as well as inflation being high, as well as the unemployment, I guess being probably more resilient. You know, especially tying back to what was said last week with unemployment being 4.3%. So it'll be interesting to see. I don't think there'll be too much of surprises from the RBA minutes. I don't think it's going to really impact the markets too much, considering I think everything's kind of priced in when it comes to traders.
The market's
But it'll
already
be
priced in at 94% chance of a rate hold. Can't see that swaying around too much.
Yeah, it's really surprising that the RPA tracker is saying 6% of actual interest rate cut when I think it's probably more like a 1% when it comes to the markets from traders' perspective. So interesting to see that sort of percentage, and honestly have no idea how they got to that rate. But we're also
Mate,
going to look
they've surprised us all before, to be honest. Not out of the realm of possibility
at.
that they pull a
Yeah,
fast one.
no, we saw a bit of yeah, it was on the tables and then off the table. So yeah, it's hard to tell when it comes to the RBA. But yeah, also rounding up, we're also looking at the Canadian data. So we're going to look at the CPI data, which is going to be interesting because the CAD this month has really dropped at the beginning of this month, but really recovered last week to be around the same sort of price.
I'll run in for the Eurozone as well. Got the Eurozone PMIs coming out. I won't touch too much on this one though, because I think the ECB has been pretty vocal about their intentions to hold rates, especially going into the next meeting. So I don't think this will sway too much away from expectations. But I did want to touch on the UK markets. So, especially in context of the UK CPI, last week we did see comments from one of the Bank of England members, Green, who did emphasise concerns over inflation. I wanted to talk about that in context of what happened late on Friday. So on Friday, we saw UK bond prices absolutely tank, along with the pound as well, with the pound hitting a 2-year low versus the euro. The FTSE 100 also declined, and that was all off the back of reports that the UK budget is no longer expecting to see a rise in income tax. I did see take as well on Reuters as essentially saying that if Reeves doesn't increase the income tax, then they might be looking at higher taxes on banks to fill the fiscal hole. Personally, I don't really understand how that one will work, but what I do think though is it puts a lot of eyes on inflation in the UK. Considering we did see the pound and the FTSE both decline towards the tail end of the week off the back of that announcement, I personally am expecting that to carry through at least until we have a bit of clarity over the budget. But yeah, so, Steve, have you ever seen what would be the income or what would be the impact if they
Yeah.
do start taxing the banks?
No, don't know how they would actually tax it, to be honest. And
Not a
yeah,
clue.
it's interesting. They're trying to get obviously money, similar to other sort of central banks. So yeah, no, it'll be interesting to see how they're going to do that. But yeah, rounding off, I guess the week was also around the US sort of data. So it's going to be fairly important to see what the FMOC, so basically the decision around the last Fed meeting. It's going to help when it comes to the sort of sentiment last week. Obviously, there's a sort of cautious gauge at the moment. It would definitely say about Mirren being a 50 base points when it comes to his cut, as well as it will give a bit more light, maybe hopefully in regards to Kentucky Fed Smith, who was on hold. But it will also give a bit of an understanding of all the other sort of Fed members, just to see what the sort of vote could be. I think it's going to be a sort of mixed bag, so we'll see a bit of volatility, as well as just considering all the Fed hawkish comments around high inflation. It'll be important to see where the actual priorities lie from the Fed. So I think they've kind of changed from the employment front to more of the inflation concern. So it's really going to paint a picture. We'll also see with the government shutdown no longer be in place. We're also seeing obviously the continual jobless claims as well as the unemployment rate. That will be important to see where we're sitting when it comes to unemployment and to see whether the US is going to be resilient. We're also a notable earnings that we're actually going to have is we're going to actually have NVIDIA, I believe, on Wednesday. So they're set to announce their results. And NVIDIA, considering that it's currently, as of today, it's 4.6 trillion. When it comes to the market cap, obviously it hit 5 trillion recently, but those sort of earnings are really going to probably impact the likes of the NASDAQ, for example. So it'll be interesting to see how things panned out with NVIDIA's. While we've also got the September non-farm payroll, so we're gonna be seeing with that sort of data. You're going to be touching on it a little bit later on, Ollie. So yeah, not sure what's going to occur with that when it comes to considering that it's 2 months ago almost.
Well, let's say, I mean, do find it interesting what you said about Nvidia, though. I think since we last actually spoke about Nvidia, they dropped below the 5 trillion market cap. So I think it's very much commentator's curse from the two of us. Okay, so we'll move into the technical section now. Let me just share my screen with everybody. So first market I wanted to speak about is silver. Obviously, we've spoken about gold a fair amount of times, so I did want to touch on another one of the precious metals, which is equally grabbing the headlines. So starting off, we can see silver against the US dollar starting on the weekly chart as well. Been well documented this year. We have been on a pretty impressive bull run since breaking resistance around the start of June. We've then also seen prices really overextend past its moving averages, which are all fanned out, all pointing in the same direction, which is a good signal of bullish momentum. We can see once we did hit the all-time high, that would have been at the start of October, we did see a strong sell-off to come and find support around the 46, trade up. We did see a retest of this high as well last week, just coming in just shy of its all-time highs, rejecting that one and then trading lower. So for the week ahead, I'm personally looking for buying signals. I'm a bit of a bull in the silver market. So looking for last week in particular, seeing since falling off its retest of the all-time highs, you see a strong sell-off, although it did start the week above its moving averages. And why I think this is quite significant is that last time we did see a strong overextend past its moving averages and it failed to break a new high again. We did see it trade lower into its moving averages. And in this particular instance, it came overextended, but it failed to touch on its moving averages. So for right now, I am looking for the prices to pull back slightly further towards its 20-day moving average, potentially into this range around the 49 sort of area. And then if we do see it find support at its moving averages and then go on to make a higher high on today, I will be looking for an entry to retest its all-time highs. Similarly, though, if we do see it trade into its moving averages and then break below, we could see it then challenge towards its next moving average around the 50-day. But I do think for where the prices are now, I am looking for a signal to go either side. So right now, as I say, I'm looking for the prices to pull back and see how it interacts with the moving averages. And the next market I wanted to take a look at, given that we do have CryptoCon coming up this weekend, I wanted to have a look at Ethereum. So I'll start off on Ethereum for the weekly. That's Ethereum against the US dollar. So we can see since reaching its all-time high around the 18th of August, the week of the 18th of August, it's been in a pretty strong downtrend. You can see here on the channel as well, dating back from late September. Where I do think this is quite significant, though, is if we're looking on the weekly, we're seeing, especially in the upper part of this channel, we're seeing it has traded into the lower part, but failed to close the week down in this lower part of the channel, then moving up. So we're seeing some pretty long candlesticks, pretty long wicks on the bottom of each of these weeks. But this week just gone, we actually closed in the bottom part of this channel, which I do think is quite significant for some bearish pressure on Ethereum at the moment. So if we look into the daily, We can see that we have started off the day pretty strong. I think we're up about 3.7% on the day so far after finding support at the psychologically significant 3,000 price point. So if I am a bull in this area, in this market, I'll probably be looking for an entry to buy with a challenge towards its moving averages to see if we can break on last week's high. If we do see a break on last week's high, I do think we could trade higher, break its previous resistance or previous support as well around the 37 sort of range. However, if we do see the prices move higher to its moving averages and then fail to make a higher high, it will be we'll be carrying on the bearish trend which we have seen. We can see there have been a sequence of lower highs as well as lower lows. And if we do see prices fail to make a higher high on its high from last week, it will be a continuation of this trend where I'll be looking for a sell to retest the psychologically significant 3,000 price point. Okay, so that brings me to the end of the technical section now. So moving into the Q&As, where Steve and I will answer your guys' most commonly asked questions from last week. Again, you'll see on your screen just a little banner on here reminding everyone that we will be at CryptoCon this coming week. Vantage will be there on the Saturday and Sunday. So if anyone is planning to go or looking to get involved with it, please feel free to reach out to us. Come down, say hi. We'd love to meet as many of you as possible. So
Definitely,
moving into
it'll be good to obviously meet face to face. And just going into questions, I guess first one is really what's driving the decline in Bitcoin. So fitting, considering that we've got CryptoCon coming up, but Bitcoin actually closed below 100,000 USD for the first time since the 7th of May 2025. So it's previously dipped below that 100,000, but never actually closed before below that 100,000 since May. So it's actually I guess lately it's really been that sort of resolve sentiment. So and plus traditionally Bitcoin has also kind of followed the Nasdaq. So considering that Nasdaq had a few sort of volatility and as well as a decline last week, Bitcoin was a bit of a risk-off, as well as similar to the Aussie, for example, is a risk-off currency. So we saw Bitcoin really dive. We're probably seeing that we're looking to see whether that can obviously break back above the 100K psychological barrier. Otherwise, it could be looking at that sort of support levels. And from what I could see with the sort of support, we're looking at maybe around that sort of 87,000 USD range. So it's interesting to see, I guess, with Bitcoin, just the sentiment out there. We've seen a lot of outflows, not only from institutional Bitcoin ETFs, but also retails. So piggyback off, I guess, also the whales kind of selling out. So it's interesting to see with that decline, and it'll be interesting talking point to see how it ends up at the end of this week.
all right, and I'll take away with question two. So I had this question a couple of times. Will the backdated September data be significant? My personal opinion, I would say yes. Reason is because it will reduce price uncertainty and hopefully give the markets a bit of an indication of how the US economy has been tracking. And also give an indication of how this should influence the Fed ahead of the December meeting. As Steve mentioned, the primary focus is on the unemployment data alongside the inflation data. But I think given this week in particular, it is focused heavy on inflation. It should be significant. So as well, there is an argument to be made about how much will this data actually shape Fed policy, given that it is somewhat outdated. But considering that the White House has now confirmed that the October data may never actually be released, I think it puts more emphasis on this September data to shaping Fed policy. Personal opinion is that it will bring some volatility into the markets for the week ahead. So if you are looking to trade around these sorts of data releases, I would definitely recommend having a look at your own risk management strategy. Okay, so that brings us to the end of the video today. A recording of this will be uploaded on YouTube once we have concluded. As well, we will be posting in a link to our VIP chat rooms as well as the Telegram group. For anyone who's looking to get involved with the Open, ask any questions or anything like that, please feel free to reach out to us in one of those channels or to Steve or I directly. That's all from me. Thank you, everyone, for watching. And Steve, I will see you later.
Thank you, Ollie, and have a great evening, everyone. Bye.